It's going out there. It's Tuesday, March 29th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down headlines and tell you what's really moving these markets. Have to start off by saying Rock Chalk Jayhawk, Final Four, which is awesome, along with Villanova, North Carolina, and Duke. And we heard all the talks of upsets for this tournament. This year is different, as we're going to see more parity among those mid-major conferences. And what do we have? Arguably the best four programs in the entire league over at least the past 10 years, probably the last 30 years, if you want to throw Villanova in there. But these are the best programs in the Final Four. I mean, all of them have at least 3 championships each. That's the first time you've had those teams as Final Four in the history of the Final Four. Villanova are probably the most Final Fours, I think, over the past 6 years. Was it 2 championships? But these are all great teams, great programs, so it should be a lot of fun. And that North Carolina-Duke game, guys, I mean, it's going to be special. I'm going to say that it's going to be the most watched game in the history of the NCAA. You couldn't come up with a better script. You have Coach K retiring, greatest coach ever, arguably almost across all sports. And then this year, what happened? I mean, these two teams hate each other. Their schools hate each other. This isn't like, oh, well, we have respect. No, they hate each other. Anyone from North Carolina Duke knows that. And to the point where Duke, when their first meeting, when they play twice, and sometimes they play in a tournament. They didn't play in their conference tournament this year, but they played the first time, Duke winning at North Carolina. But then North Carolina went to Duke, and they blew them out on their own court, and that was Coach K's last home game of his career, which they loved. So now, playing them, I think it's the first time they're playing in the NCAA tournament in history. Usually they're on other brackets and the great seeds, but it's going to be a great game. Doesn't get better than that. And then we have Kansas against Villanova, which should also be a great game, despite Villanova's best player. Yes, I said best player, and people are like, Gillespie is great. He's player of the year, Big East, the last 2 years. Justin Moore is the second leading scorer of the team, plays the most minutes. He's the best defender by a mile. He covers the best player on the other team and shuts them down almost every game. They're not deep. They're only 6 deep. Now they're 5 deep. So, yeah, they don't have that deep bench, but I have a feeling, I really wish they were at full strength, because both of these teams at full strength. They did Kansas. I've seen both of them play. Kansas is better. Not that Villanova can't beat them, but I have a feeling that Kansas may play down a little bit, be a little less focused. So that game's going to be a lot closer than people think, even though pretty much their best player on that team, I'm not taking anything against Colin Gillespie. He's amazing, but that kid is really the engine. He's like, man, I mean, there's so many great players like that in the NBA. It's not just role playing, but he's also a scorer. He's a rebound, assist, everything. So, yeah, it should be pretty cool. And with Kansas getting, I've never been to a Final Four, but I would be going to the Final Four since Kansas is in it. But my daughter's making a confirmation this weekend, which I'm very, very, very proud of. But I may go to the final. That's if, Kansas beats Villanova. But if Duke does get in, that ticket is going to be an absolute fortune. So I'm probably not going to get too many friends to go because I don't have many Kansas fans. Maybe I get a North Carolina Duke fan to go, but that ticket is going to cost a fortune since it's going to be Coach K's very last game before retiring. But I may go. If you are going or you plan on going to the championship game, if Kansas does make it, send me an email, frankcurzioresearch.com. I may go with you because it's going to be hard to get anyone else to go if you're not a fan. They're going to pay a lot of money for that ticket. I'm willing to do that on Monday and fly out there on Sunday night. Let me know, frankcurzioresearch.com. Now, let's move on. It's interesting to see what's taking place in the market and the volatility. Where when the market pulls back, which you haven't seen in a few days, but when the market pulls back, there's industries that money's clearly flowing into. So it's not a massive sell-off in every single sector and stocks, which we saw in January and into February, especially when Ukraine, Russia really started heating up. That was on top of the Fed going crazy and saying, well, all of a sudden it's not transitory inflation, and we're going to go crazy and raise rates like nuts, right? That was in November. But we saw everything get hit. It didn't matter if it was Bitcoin, gold, didn't matter. Every single thing got hit. Banks got hit, everything. But now, if you've seen over the past couple of weeks, when the market pulls back, gold has been a safe haven, uranium, agriculture, many commodities, including oil. And these sectors seem to get hit when the NASDAQ does well. So if you're looking at this market and where we're going to be, because we still have tons of problems, inflation's out of control, supply chain issues are worse today than they've been any single time since COVID. And again, I track this stuff, and they have satellite imagery. You have Goldman Sachs. You have IHS Market, which just got bought by S&P 500. Those guys have been tracking this for 25 years. Both of them are saying their latest reports, which are weekly, which I read and I get, it's horrible. It's horrible right now. So you're looking at earnings. I can't see earnings exploding, although you're going to see more buybacks this year than in the history of the markets. It's going to be more than $1 trillion they're expecting. I think it might have hit $1 trillion last year, but it's going to outpace. That's just flush with cash on balance sheets, and they're going to use to buy back their stock. I don't know if that's going to be enough to keep a lot of these stock prices higher. Some of them are going to do well. Like I said, it's not all sectors. I love the separation because that provides a stock picker's market. But the two sectors I love the most right now, if you're looking at the next year, 2 years, 5 years, even into the future, two sectors. It's banks and crypto. And why is that? Because that's where trillions of dollars are going to flow into. And starting with the banks, they make a fortune off of higher rates. And if you want to know how much, and I covered this a little bit last week, but State Street came out and said they're going to make $25 million each quarter for every 25 basis point hike. Let's put those numbers in perspective, which I didn't do last podcast, which was last week. So that's $100 million a year, right? If you multiply that, again, that's for every 25 basis point hike. If you multiply that by 5, which is expected this year, right? At least 5 rate hikes. When I say 5, I'm counting, 25 basis point hikes. It could be a 50. That would be 3 instead of 2, right? So they're expected 50 basis point hikes going forward, at least 2 more. So that's 5. It could be even more than that. But say if there's 5 rate hikes, right? 25 basis point increases, 5 of them. That's $100 million, right? So $100 million, which is expected this year. Now, State Street is talking $500 million in pre-tax earnings. That's how much it would be with 5 rate hikes. $500 million pre-tax earnings, which cost almost zero to them in terms of overhead or anything. They're doing the same exact thing they always did, right? $500 million, just getting $500 million in cash. Now, to put that in perspective, State Street earned $3.2 billion in pre-tax earnings. So if you're looking at that $500 million on top of that, that's 15% growth in those earnings, which is likely going to be, if I had to guess, over the next 12 months, 3 times faster than the average S&P 500 company. That's how fast State Street for doing nothing. And I'm not talking about all the other money, the other $3.2 billion they generated. This is free money to them. Free money. So they're doing exactly what they're doing right now, lending out money, but only at higher rates. And this is not fee income. This isn't the fee income, right? So that fee income, that helped them generate $3.2 billion, right? This is interest income. And if you're looking at the banks and you listen to what they're saying, it is incredible because there's something very important you need to know about banks. And this is a hidden catalyst. We know when interest rates go higher, the spread routine, they make more money. We hear that all the time. I'm going to tell you something that you're not hearing. You're not hearing out there with the banks. Okay, few are talking about it. I haven't read much about it. I've read it one report talk about this. Okay, so banks capture that margin between what they borrow and what they lend. But with rates so low, they generated little interest income over the past how many years? So most of the earnings we generate through fees, which is investment banking, money management, credit cards, mortgages, deposits. That's great. They generated huge fees on that and record profits without the interest income. Now the Fed is aggressively raising rates, which means all the banks are going to start earning a lot more in interest income. Again, which I just explained. Here's the huge catalyst with banks. So usually when the Fed has a tightening cycle and raises rates, the saving rate for banks go up so that people keep their money there. However, banks are more flush with cash than they've ever been in the history of this industry. So while rates are rising, they do not plan on raising their rates on savings accounts, at least not this year. That's money they have to pay out. So by the way, if you keep it score at home, that's called deposit beta. Again, fancy term, which means the margins a bank makes lending money minus the money it pays out on savings accounts. So sell-side analysts, they do great research, but what they're going to do is they're going to compare this cycle, this tightening cycle, to the past major cycle we saw massive inflation, which is the 80s, right? That's how they model. You always look at comp. It's called comparative analysis. This way you can look at what happened in the past, and this is how I'm basing my model in the future. And then they fix the numbers to come up with some kind of target price, right? That's what they do. But they're going to model for their margin to go up a certain percentage based on the last time we had massive inflation, where we raised rates aggressively like in the 80s. So this is when we had mortgage rates at 15%. And the savings rate, which people don't talk about, they say, the mortgage rate, how could you pay that 50? The savings rate was 12%. CDs were paying 18% back then. So it wasn't a worse scenario if you had cash. It was a great thing if you had cash. It was terrible if you had to borrow money with high interest rates. My point is, banks are not going to have to raise saving rates at least over the next 12 months. They're flush with cash. So that means their margins are going to explode like no other time in history. Because they're basically getting tens of millions in free money simply by doing the same job they've done for the past 50 years. In other words, hundreds of millions of dollars for mid to large cap banks that they're going to generate at almost zero cost. So there's a bank, Triumph Bank Co-op, which I'm looking at all the banks and all the quotes from the banks. I want you to listen to what they said. This is last month when they report earnings. They mentioned this. As we move into this, what looks like a rising rate environment, we're in a situation that's pretty atypical with the amount of liquidity that the banking system in general has. Our competitors are flush with liquidity. So I don't think any of us are going to be in a rush to be the first ones to start to raise deposit rates. So I think early on, it's going to be fairly low. Longer term, it remains to be seen. That means they're going to make, excuse my language, a shitload of money with interest rates higher, but they're not going to have to raise that savings rate, which is money coming out of the bank, right? So if you look at Stifel Nicholas, and I mentioned this last week as well, their investment banker lender, they said, let me be clear. This is what they said. This is a month ago. Let me be clear. Our base case calls for us to increase our net interest income in 2022 by close to $150 million on balance sheet growth alone, right? So without rate hikes. Then they go on to say, if we get 3 rate increases that we expect, and it's going to be a lot more than 3, but they're saying 3. That's what I'm modeling for. I should say beginning in March, right now, our net interest income could possibly increase by approximately $250 million. And they say, given a low compensation attached to net interest income, meaning that they say right there, we're not going to have to spend money for more people or anything like that. There's low compensation, right? This would be a significant driver of a bottom line in 2022. This is not being factored into banks, and they're still down well off their lows. So, guys, here's the plan. You're not going to hear this out there, but here is the master plan, okay? Not only should you have banks in your portfolio, since you're going to see massive earnings growth for at least the next 18 to 24 months, but it's probably better to transfer some of the cash that you have in your bank, which is in a checking, savings account, money market accounts. Again, with inflation, you're getting wrecked. Transfer that money and buy a large cap bank with it. You're going to earn at least 2.5%, right? That's the yield that they're paying. So they're paying 3 to 4%. But more importantly, if you're keeping it at a bank, if you're keeping your cash at a bank, and they're not going to raise deposit rates, right? And I've seen this from several banks. They're not going to do it, at least in the short term. That means you're going to get destroyed, absolutely destroyed by inflation. However, if you take that money and buy a banking stock, it puts it in your favor. It reverses it, right? So this allows you to take advantage of that massive inflation instead of getting hurt by it. By buying the actual bank instead of keeping your money at a bank. Of course, there's risk to owning stocks compared to just, having your cash sit in a savings account, which makes you sleep at night, and people don't understand how much they're losing with inflation. Inflation's out of control. But there are risks. So don't throw all your cash into a banking stock. We could have a crisis that everything gets killed. Don't throw all of your cash in there, especially if you need to be liquid and you need it. And again, you could sell your stock at a bank and have that money probably within a day or two. But for me personally, I'm putting 30% plus of my cash in banking stocks. One of them I just recommended, a Curzio Venture Opportunity, which is actually a small cap name, massive deposits. I think it's about a 2.83% yield, right? So massive deposit plans are lending at much higher rates, waiting for this moment, and roughly 70% of their assets are in 2 states. You want to know 2 states? Florida and Texas. So those are 2 of the best in terms of population growth and super low taxes. These guys have it right, expecting this environment. This isn't a boring stock. I'm looking to, let me keep my money here and earn 2.8%, 3%, whatever. No, the earnings growth, these are the new growth stocks. The Fed's definitely raising rates. These guys are going to make an absolute fortune. And that one negative they usually have in rising interest rate environments, they're not going to have to raise those savings rates, which is money coming out of the banks right now because they're so liquid. That's really interesting. And I don't see anyone modeling for that. Now, crypto, the other sector I like. I don't know if I convince you with banks, but that's what I'm doing. Just telling you what I'm doing. You don't have to do it, whatever. You can listen to me and say, this guy's nuts, he has no idea. Whatever. But crypto. So Bitcoin's now up close to 40% from, I think it's the day before Russia launched its invasion. So this is, I think it was January 21st, 22nd, right? So that's when the U.S. officially announced Russia would invade Ukraine. That compares to the S&P 500 over that time frame, which is up 8%. Okay, that's how much Bitcoin has outperformed the S&P 500. Now, why is it rallying now over the past couple of weeks? There's no coincidence. I mean, if you look at this month alone, when you saw Biden's executive order, which is about 3 weeks ago. Okay, I don't care if you like Biden, I don't care, whatever. It doesn't matter. What he did is he opened up the floodgates for institutional money to come into America. Okay, so not a coincidence that after he made this announcement 3 weeks ago, what do we see? Goldman become the first major bank to trade Bitcoin over the counter. Cowen, another large investment firm, well, not more boutique, but large, so Cowen, very respectable company, said it will soon allow institutional clients spot Bitcoin trading. And Ray Dalio's Bridgewater, if you're not familiar with that, $150 billion in assets under management, largest hedge fund in the world, said it's about to make an investment into a crypto fund. All this news came after Biden announced that executive order. We also had Terra, which is a crypto. That's a network behind the Luna token. They're building a $10 billion Bitcoin reserve fund to back its stablecoin, which is important. That's the with Tether. They want to look to see if it's backed by anything, and they're not showing their books. All these stablecoins, notice, we're seeing this across the board with a lot of stablecoins, not so much with Tether. They're all starting to buy Bitcoin now. This way, they get back their stablecoin. Not a coincidence. This is happening after this news. Also seeing Russia go into Bitcoin as their currency crashed. This protects them or, their savings, right? People's savings who are sitting in a ruble, which lost what? I don't even know how much is down now, 35, 50%, whatever it is. So to put that in perspective, if you don't understand currencies, and a lot of people don't, and I understood it the most when I bought, I think it was 2012, I had a lot of stock in Canada, still have a lot of stock in Canada and Canadian dollars and stuff, and had a brokerage firm, but they were on par with the U.S. in terms of the dollar. I don't know where it is today, but it was like 30% now. It's a 30% difference, which is huge. So to put that in perspective, say if you have, using regular numbers here, you have $100,000 in a Russian bank, just from the loss in currency, it's worth $65,000 now in U.S. And if you decide to put that $100,000 and you took it out of the ruble and put it into Bitcoin, you're up easily over 35% since January 22nd. So that 100K is now $130,000. I'm just putting it in perspective, not telling you to put all your savings into Bitcoin, but I'm putting in perspective of how big that currency risk is, because it adds to the value of why countries, especially outside the U.S., who are weak and their currencies are crashing and we're seeing inflation, are going to see money pour into Bitcoin. That's a great option for them. It's also an easy option where you can put it into Bitcoin, you can leave the country, and then you could have it in another country. You can't carry the gold, you can't carry cash. That makes a lot of sense. But these are no coincidences, these stories. Biden's executive order is opening up the door to trillions of flow into cryptos. And it's not just Bitcoin and Ethereum, which are on fire. We have several names in our crypto intelligence portfolio that popped 30 to 50% over the past 2 weeks. But if you're looking at this news, that executive, it's a game changer. It's providing a future regulatory framework for institutions to invest in cryptos. And what does that mean exactly, guys? It opens the door to 250 trillion, guys, in global assets. That's how much there is in assets in the management. Now, these are assets that need to be invested in something. If they're not, those firms managing that money do not make fees. They're not able to charge fees on it if they just keep it in cash. It has to be in something. And these firms, their clients are demanding. They're not like, hey, I think it's a good idea. They're like, I want to get into crypto. This is based on what Jamie Dimon just said. It's based on Article Financial Times, tons of sources. You can read them. Look it up on Google, of their clients demanding that they want access to crypto. Not all their money, but they want some access to it. Because people say you should put 5% in gold. Well, a lot of people are saying now, the new generation digital, let's put 5% in Bitcoin. But we can't do that. We need rules in place. So it's likely why Biden made this announcement, since there's lots of lobbying dollars pushing for this agenda, because if these companies can't invest in crypto through their banks, and say if it's whatever, say if it's not Goldman, but use Goldman as an example, and Goldman's like, hey, we're not going to invest in crypto, just like Jamie Dimon said. We're not getting in Bitcoin, we're not investing in crypto, where their clients are like, well, I want crypto, I'm freaking leaving. Taking 10 million here, 100 million there. I mean, yes, they have trillions in assets, but that's going to go to someplace, to another firm that is getting into crypto. So now you're seeing Biden actually say, okay, here's the framework. That's what they need. If you listen to I don't want to say important and low importance of so many people in this industry, but if you're looking at the institutions in crypto that manage money, the biggest, the Winklevoss twins, Novogratz, Stablecoin for USDT, you're looking at all the big names across all the platforms, all said the same thing. They all said this is a watershed moment, because they have no clue. They can't, institutions, they have a fiduciary responsibility. They can't come into this market. And those people who are diehards and say, oh, the institutions, and we don't want a regulatory framework, I'm hoping they don't go overboard. I don't know if they will. But I also know that for those of you who are buying Bitcoin and hold it forever and think it's going to go through the roof and go to 250,000 to $1 million, it can't get there unless you have institutional money, trillions coming into it. It's amazing how high it's gone with retail investors. But eventually, there's a cap on that. There's a ceiling. There's no ceiling to the amount of money when it comes to, you could say 250 trillion is a ceiling. But those are trillions of dollars that could flow into crypto now. And this is where the most innovation is taking place. And then to open up even more, you look at CZ going to Dubai, and Dubai gave Binance a crypto license. And then you had FTX, one of the largest crypto exchanges, doing a great job. They also see the license to operate in Dubai as well, which will be used to trade options in cryptos. So not a coincidence that other countries are like, holy shit, the U.S. is for real now. So we either fall behind or we better start locking in companies even before they come out with that regulatory framework. So that, it's easy to do a great job going all over the place and expanding his brand, who's one of the biggest names. I think he's the richest crypto person. I love him. I mean, Binance got hacked early on. It was in our portfolio. They got hacked for, I think it's tens of millions of dollars. This guy paid out immediately. Had the money, no bullshit, whatever. I mean, that provides credibility. That's why it's pretty much the biggest and best place. I mean, I just wish they had more U.S. exposure. But maybe they do now. It's going to be a framework. We'll see. But there's a clear path for trillions to flow into crypto, which is significant since there's all the innovations taking place. NFTs gives you ownership of your material on the web, where you don't have to rely on having your material pulled from certain platforms. Even Elon Musk said he wants to start a competitive service to Twitter because Twitter, Facebook, YouTube. I mean, these guys remove whatever they want to remove. They control, they own your content. You're on their platform. They own it no matter what. And you might not even say anything bad. Maybe it's something, whatever. And they start removing it. You can't get it back. If they're like, no, what do? You can't sue anybody. You can't do anything. You see those people who get removed. They go on other platforms and say, Facebook removed me. Zuckerberg's an asshole. And you know what? They get nothing. Nothing. Their followers, it's hard to even follow them. Get servers up to get their own platforms. And they can bitch and complain all they want, but they can't do anything other than that. NFTs changes that. Look at the metaverse. It's massive. Decentralized finance, play-to-earn gaming, DAO, security tokens. And each of those trends alone could give us separate trillion-dollar industries over the next 10 years. Guys, crypto is here. It's why Ethereum's market cap is now, $360 billion. If you take that market cap, it's bigger than MasterCard. It's bigger than Bank of America. That's why you're seeing crypto names on stadiums. Guys like Matt Damon, Larry David doing commercials. The bigger influences on social media investing in these companies. It's here, and the growth potential in the next 5 to 10 years is absolutely enormous. Now, for me, we're getting lots of questions about our crypto intelligence newsletters, and I can tell you this. Right now in our newsletter, 10 cryptos trading below our buy-up-to price. And some of these names were recommended over the past 6 months, so they fell. They've bounced back, but still have enormous upside potential. These are names I researched thoroughly. They have backing of major funds. They got good management teams. They have utility features for their tokens. There's not a lot of bullshit. But if you're a believer that Bitcoins will one day trade over 100,000, one day. I'm not talking about tomorrow. I'm not talking about the end of this year. Even if it takes 2 years or 4 years. If you believe that, if that happens over the next few years, some of these names are likely going to see 10x plus gains. And you can't really get those gains right now in the stock market. Not when they come out at crazy IPO levels. Saw Coinbase, even saw Uber. Is Uber above its IPO price yet, even though it's come back? And then you have the snowflakes. I mean, these things have gotten annihilated. Roblox, IPO, or you do the SPAC route, which, they all get in, they all dump their stock, they pump it, and then these things are all getting destroyed right now. And they're out to their next SPAC, right? They just told you this is the greatest thing ever, and they inflate the valuations. When you're inflating valuations and you're buying these things, when they're already pricing in the next 25 years of growth, there's a little upside for you. Yes, you could earn 50%, 100%, 150%. You're not going to earn life-changing 10x, 20x, 100x, which we've seen in crypto. And I think going forward, those gains will be even greater based on the names that are getting involved in these incredible, innovative trends. So we're seeing lots of interest. And we do have a lot of names you can buy right now. So we open up Crypto Intelligence to new subscribers with a special offer for this week. If you want it, take it. If not, don't worry about it. I understand if you don't want to get into crypto. But if you are thinking about it, I suggest doing it this week. So we're cutting the price in half for an annual subscription, which makes the offer great by itself. And people say 50% off. I'm also going to give away a free year. This way, you're in this for 2 years. To let this trend run over the next 2 years, you're going to see incredible growth. You're going to be able to pay half the price by 2 years of Crypto Intelligence. Again, it's the best offer we made on this product since we launched it 3 years ago, but it's only good for this week. If you're interested, you can go to our website, curzioresearch.com. There's a banner there. If you're on an email list, you're going to be getting email for us with that special offer. Again, only good for this week. But I want to try to get, for people who have been asking about it and thinking about it, the timing right now. I love getting people in at the right time, because those are people that are going to be able to benefit. Not only that, within our portfolio, we have lots of names that you could buy right now. So it's not like you get the newsletter and that you can only buy the last name, right? Because everything's trading above the buy-up-to price. That's what happens in Super Bowl markets. There's over 10. And those are plays on DeFi, Metaverse, security tokens. Recommend a security token. One super speculative coin, which I think has incredible upside potential. I mean, it's a pure play on cities like New York, Austin, Miami, who are getting into crypto. But I see hundreds of cities following their lead. And this is the coin that all of that flows through. And why do I see that? People say, well, electricity costs on mine. It's much better in terms of tax dollars than legalizing marijuana or legalizing gambling, which really, really hurts people. And when you look at the electricity and the cost compared to other things that banks are using and stuff like that, it really is little. It's a whole political agenda against it. But you're going to see a lot of cities, they need tax revenue. They spend much more than they bring in. And you have 3 cities who are in here. They're going to, it's just like when Colorado opened up the door for marijuana. Look who followed. Everybody followed and said, okay, this is the easiest way to make tax dollars. Same with gambling. Easiest way to make tax dollars. This provides a much safer way for people. Unless you like, more and more people to smoke marijuana and gamble, which we know happens sometimes with that. But this provides an easier way. This is the pure play on all that growth from those cities going to crypto. Also, with Biden opening up the U.S. to institutions, I mean, I've never been more bullish on this sector in my life. Okay, that's saying something considering the money I made in this industry over the past 3, 4, 5 years. So when it comes to crypto, you have to have money allocated to this sector. Is it risky? Yes. But when you're looking at the risk reward and what you could generate, you're not going to see that anyway across all industries. I've been doing this for 30 years. You're not going to see that. To the point where if you're risking a certain amount of capital, your gains could be 10x, 20x, 50x, which we've seen, compared to risking that same amount to, again, get maybe 2x, 4x, 5x, and that's in whatever industry. Meme stocks or crazy stuff or biotech or whatever. So it comes a risk reward. Again, it's all a matter of how much you want to speculate with your money, but we all should be speculating with at least a certain percentage. If you are, it needs to be in crypto, guys. That's where all the innovation is taking place. This is like the internet. It is here. All the institutions are about to rush in. And the next 3 to 5 years, like I said, I've never been more bullish at any time in this sector in my life. So if you're interested in that offer, go to CurzioResearch.com. There's a little banner there. If not, no worries. I know a lot of you are like, I don't want crypto. I still need to learn. You can learn from this. I do videos, 30-minute videos, get educational stuff that you could find on there. You have questions or comments, you can email me directly too. But yeah, it's there for you if you want it. Only available for this week. So guys, that's it for me. Any other questions, comments? Just want to cover the things that I'm doing with my money. Banks and crypto, 2 things I love. Okay, there's trading opportunities all over the place. Lots of trading opportunities, and I get it. Trade back and forth. We went to oil, agriculture, uranium. I get it. People hold uranium usually long term. But if you're looking for the next 2 years and investing in something for the next 18 to 24 months, you have to have exposure to banks. You have to have exposure to crypto. That's where the institutional money, trillions, is going to flow into. And those are on trends that are not changing anytime soon, unless you expect governments to stop spending as much money as they're spending, or unless you expect the Fed to stop raising rates, which if they do, we're going to see inflation at 12, 13, 14%. So they have to raise rates. Those are 2 almost guarantees that are going to happen, and the 2 sectors are going to benefit the most are cryptos and banks. So that's it for me. Again, questions, comments, FrankCurzioResearch.com, and I'll see you guys tomorrow. Take care.